is crashing. So crypto platform Coinbase's skid yanks stock below $250 reference price. So Coinbase Global on Monday closed below its $250 reference price for the first time since the crypto platform listed on the Nasdaq. So Coinbase, whose users primarily deal in Bitcoin and Ether on the Ethereum protocol last week, reported strong first quarter results in line with its preliminary release before it went public, but concerns about the volatility of its underlying digital asset business are providing the stiffest headwinds for the platform, experts said. Last week, Coinbase, headed by Chief Executive Brian Armstrong, reported $1.8 billion in revenue, compared with $191 million in the first quarter a year ago, and it reported $771 million in net income versus $32 million a year ago, and said that it planned on adding popular crypto Dogecoin to its suite of offerings in 2 months after a surge in the meme asset has helped its rivals presumably grab some market share away from the U.S. largest crypto platform by volume. So the crypto company boasts a user base of 56 million, and 6.1 million of that base transact monthly. Coinbase is forecasting monthly transacting users of 5.5 million to 9 million for 2021, depending on the performance in the crypto market. Coinbase is down around 30% since its public debut, in step with the decline of the broader crypto complex, but a number of analysts remain bullish on the company's stock. Kyle Voigt, an analyst at Keefe, Bruyette & Woods, who initiated coverage of Coinbase on May 3rd at market performed with a price target of $325, said during a recent podcast hosted by the company that Coinbase has a tremendous opportunity to better monetize its existing customer base, pointing to staking as one possible near-term avenue for the company to grow revenues. Staking refers to putting out virtual currencies and earning rewards for that stake in the process of validating transactions on proof of stake, or POS protocols. We believe Ethereum staking alone would generate over $100 million in net revenues by 2023 from $0 in the first quarter of 21. The KBW analyst speculated, noting that the Ethereum blockchain is moving from a proof-of-work protocol to a proof-of-stake soon. Proof-of-work blockchains like Bitcoin require tremendous amounts of energy or computing power generated to validate their digital ledger. Shares of Coinbase fell 4% on Monday. By comparison, the Dow Jones Industrial Average closed down 0.2%, S&P 500 index declined 0.3%, and Nasdaq finished the session 0.4% lower. The CFRA research's Chris Cooper is maintaining the company's buy recommendation for Coinbase, but last week cut the price target to $375 from $400. We maintain our buy opinion as we concede CoinShares are still embedding very high expectations, but we think they can be exceeded given the trajectory of the growth, the CFRA analyst wrote. Now, the interesting about Coinbase is that basically nearly all of their money that they made, or the majority of their money that they made, wasn't necessarily because of Bitcoin or Ethereum in the sense of like the holdings of it. It was actually more so about the transactions that was going on the platform, right? So basically, if it's a bull market or a bear market, they have a very high chance of making a lot of money. For example, let's say that, all the cryptos, or like the top main cryptos, Bitcoin, Ethereum, Litecoin, maybe Doge as well, once they end up having it. Let's say that it all goes up to, I don't know, let's just say like Bitcoin 100,000, Ethereum like 20,000, 25,000, right? And so on and so on and so on. Well, they're going to make a lot of money as it rises up, right? Like a crazy amount of money as it rises up, especially if the volatility is so crazy during that time. Or like, let's just say like whatever price it is at the moment to $100,000, which could be, that's like I think a nearly $50,000 jump. Like there's going to be a lot of volatility if it were to do that within like a couple of days, right? If that were to happen, they would make so much money during that time frame. And then on top of that, if it crashes to all the way down to like 5,000 per coin, and we're using like Bitcoin as an example. So let's go from like 100,000 to like $5,000 in a matter of like months or even less than that, they're going to make so much money as it's crashing down, right? Because the majority of their money is actually made from the transactions, which is super crazy when you really think about it, right? Like for them to not necessarily really have to worry too much about the price of any individual cryptocurrency, and they more so just make the money on like each transaction, is one, a great business model because they're not reliant on cryptocurrency's prices. But two, it just allows them to free up and do something like the whole proof of stake thing, right? Where they do that with Ethereum. Because once they end up doing that, that could end up making, like they mentioned, a lot of money. It allows them to, it gives them opportunities to do a lot more things with cryptocurrency and look more so for the long term of their business and what they could potentially do. So either way, I think this is probably a pretty amazing thing. Like I think Coinbase in the next 5 to 10 years is probably going to be very similar, not necessarily to Amazon, but more so like an Apple, or more so like, what would be another good example? Almost like if Apple and Tesla had a baby, that's probably what I would view Coinbase as, because they are basically first to market in the sense of like the scale of them, and they could just bring like their growth like potential is so high that I would not be surprised if eventually their stock price were to actually get to like, you know, a $1,000 per share, right? I'm not saying that that will happen, but I'm saying that I could see that happening in the next 5 to 10 years, right? Just because like this is going to basically be the mainstream cryptocurrency exchange, right? Like this is going to be the exchange that normies are going to be comfortable with. They're going to be like, okay, oh, it's Coinbase? Yeah, I'll trust Coinbase. Oh, I don't mind having Coinbase. Like they will end up having that trust factor. And as long as they don't get hacked in the next 5 to 10 years, I could see their shares doing very well over the long term. But again, this is something that you really got to, you know, always take with a grain of salt, because you just don't know what's actually going to truly happen, especially in the crypto market. But at the same time, as cryptocurrency gets more normalized in society, I can only see Coinbase basically just continuously growing, right? Because there's just going to be more and more and more people getting involved into it. And basically any exchange, any crypto exchange is going to keep going more and more mainstream, which will end up getting more and more people involved. And if the majority of their businesses are structured in the way that Coinbase is, where they make a lot of money from the transactions, then yeah, it's going to be very interesting to see what ends up happening, right? So personally, I'm pretty bullish on Coinbase. I don't have anything. I wouldn't necessarily recommend anyone to get it. But either way, if you basically invest into like an index fund that basically invests into all the stocks in the stock market, you're probably going to end up having some Coinbase in there. But either way, I think it has a good chance of actually becoming worth something notable in the future. But also, if you need help with mastering your money, so you have the opportunities to invest into something like this when it's crashing, then go down below and learn how to master your money, because at any income level, you can learn how to master your money so that you are not a slave to money, but your money ends up working for you.